Hello everyone and welcome to the YouTube channel of Being ACCA. In this video, we are continuing with our PM Pre-December 2024 mock exam, where we are moving to the second case study based question in section B. This is all about Greenwash, the eco-friendly detergent. Let's get started. A household product manufacturer is planning to set up a factory for the production of a newly launched eco-friendly detergent, Greenwash. It is planned to produce one packaging size of Greenwash through a semi-labor intensive production environment. The estimated sales and cost information pertaining to Greenwash are as follows. You have direct materials costing you $7 per liter, direct labor costing you 1.5 hours per liter at $10 per hour. Overheads, and you see a star over here, are $14 per liter. Reading the further information, you find out that the overhead rate of $14 per liter is derived based on the budgeted output of a period of 3,000 liters. However, should the budgeted output of a period be 5,000 liters, overhead rate will be $12 per liter. Selling price is $75 per bottle. Each bottle contains 2 liters of detergent. Now, the first question wants you to find out the contribution per bottle of Greenwash. Now, because I do not have any option to solve and show it to you over here, I have a small Excel file with me open here to help me show you the calculations step by step. Now, contribution, we all know, is all about subtracting from your selling price your variable costs. So we know that the selling price is got to be 75, and this is all for 2 liters of detergent. Now, if we talk about the cost, and specifically we need to consider the variable cost. So for the variable cost, we have the direct materials given to us. Direct material is given to us as $7 per liter. So 7 multiplied by 2, because 2 liters are there in one bottle. Then direct labor is 1.5 hours per liter at $10 per hour. So if 1 liter is 1.5, that means 2 liters will be 1.5 into 2 multiplied by 10. So this is going to be 30. Similarly, we will work for overheads. Now for overheads, you see there are two different, absorption rates which have been given to us. So let us check if the variable, if the overheads are completely fixed, completely variable, or are they semi-variable. So let's have a read. 3,000, if we have the output, we are charging 14 per liter. That means the cost should be 42. In the other scenario where we are producing 5,000, the same overhead absorption rate falls down to 12. This makes our cost 60. So this is not the same at both the places. That means this is not fixed. There is some part which is variable, some part that is fixed. So what we are going to have to do is we will use the high-low method over here. So the high-low method involves you to find out the variable cost per unit, which the formula goes like this. You're supposed to take the cost at the highest level of activity minus the cost at lowest level of activity divided by the output that you have at the highest level, which is 5,000, minus the output that you have at lowest level, which is 3,000. So this will give you $9 as the variable overheads per liter. So my variable overheads per liter is 9, and I need to multiply this by 2 because every bottle has 2 liters. So now my variable cost comes out to be the sum of all of this. This will be $62. Now we know the selling price was 75. 75, from 75 you take away 62, and that is going to give you the contribution. So 75 minus 62 gives you 13. 13 is your final answer. We have it in the options. We select option C. Moving further, next thing is that we are supposed to calculate the break-even sales for a period nearest to which is the option which we will be choosing. Now for break-even sales, we know that the simple formula is you take for your fixed cost and that needs to be divided by your CS ratio. So we have already calculated the variable cost per unit as 9. We can input in any of these to find out the fixed component. So if let's suppose I am taking the output level of 3,000 where my total cost is 42,000, my total cost is always going to be inclusive of fixed as well as variable. So if 42,000 is my final answer, I can subtract from it the variable cost to find out the fixed element. At 42,000 of cost, I am producing 3,000 units. So 49 multiplied by 3,000, this is the variable cost. So if I subtract the variable cost from my total cost, I will get my fixed cost. My fixed cost is $15,000. This needs to be divided by the CS ratio. Sales we have already calculated. Sales amount is 75. CS ratio is nothing but contribution divided by selling price. This is my contribution. Contribution I have calculated as 13. So my CS ratio will be 13, which is my contribution, divided by my sales, which is 75. So this is my CS ratio. Now I have to put this in this formula. Fixed cost I just worked out as 15,000. This needs to be divided by my CS ratio, which is 0.1733. And with this, you will arrive at your final answer, which is 86,538. So this corresponds to option C. Moving ahead to the third one, here you are required to answer that what will be the revenue that will be required to achieve a target profit for a cost for a period that is equal to a 12% return on the estimated initial investment of $300,000. Now, whenever we are supposed to get a target profit, we do nothing. We take the same CS ratio, we take the same fixed cost. To our fixed cost, we are just supposed to add the target profit. So see over here, I'm going to use exactly the same formula. Just I'm going to add to this what my target profit is. I want 12% on 300,000. So I will start another bracket here, 12% of 300,000. And this is going to help me come to my final answer, which will be 294,230. So this needs to be put to the nearest dollar. So because 0.8, I'm going to write it as 231. 294,231. 294,231. Moving ahead to the next question, question number 24. Which of the following statements regarding the margin of safety for greenwash is correct? Now you have to tell over here, let's have a read of the statements. First statement reads, it is the anticipated or actual production quantity of greenwash that exceeds or falls short of the break-even point. With break-even, we are always concerned about the sales rather than production. So you can simply eliminate the first option as well as the third option where they are talking about production quantity, because margin of safety you'll always have over what you are selling over and above your break-even point. Let's read the second and the fourth statement. It is the anticipated or actual sales quantity of greenwash that exceeds or falls short of the break-even point. This is absolutely correct. Let's read the last statement also. It is the anticipated or actual sales quantity that greenwash exceeds or falls short of the sales quantity required to achieve a target profit. No, margin of safety is always considered over and above the break-even point. So you select the second statement over here. Moving now to the last question that we have pertaining to this scenario is we have to indicate by clicking on the relevant boxes in the table below whether each of the following statements regarding the use of CVP analysis is correct or incorrect. So the first statement reads, the analysis assumes that the fixed costs per unit remain constant. Now this is incorrect. Rather, what our assumption is that this analysis rather assumes that the fixed cost for the period will be constant instead of per unit. Your overall total fixed cost will be constant. That is the assumption. Per unit is not assumed to be constant. That is why this is incorrect. Moving to the next statement, the analysis is not relevant for a public hospital. Now, this statement is absolutely correct, and the reason is that this is always and always relevant for the businesses who want to maximize their profits. Public hospital is in place to serve the people. They are not here to make money. Their main motive is for the people to be treated well, for the people to be in a good condition, not sick. So their main objective is not of money, is not of profit maximization. Hence, CVP analysis is not going to be relevant for them. That's why this statement is absolutely correct. With this, we are through with the second case study pertaining to our pre-December 2024 mock exam. Please stay tuned for further videos that are coming up solving this exam.